Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at natural gas prices plummeting to lows for the last several years. We'll take a look at just how low natural gas prices have gotten in just a second. Take a look at why they're moving lower, how much lower they could go, historically speaking, at least. And then finally, what this might mean for US dollar or, the rest of the asset classes, major asset classes in general, as this natural gas is an energy commodity. It seems so separate from the rest of the market, but we're going to crunch some numbers and show you either that it is its own thing or there are some ties to a market like US dollar. But let's start with the natural gas price action itself, because this is not a good-looking chart if you're a natural gas fan or a bull or a long participant. At least not great yet, as this market has moved under 180. The lows for the last 20 years are $1.50, which we briefly saw a few years ago. But right now, getting down to these levels a couple of weeks ago, and we saw a little bit of a bounce in natural gas, now back near those historic lows. And yeah, these prices, give or take a couple of cents, are lows since 2020, when we got down to that $1.50 level. And the nice thing is, I guess, if you are long or bullish this market, is it's a very volatile commodity that has the potential for a lot of upside, as you've seen in 2021 and 2022. Especially this market has gotten up to $3, $4, $5, and even as high as $6, $7, $8 and beyond. But of course, the flip side of things is there's always more volatility to the downside as well. We'll get to that in just a second. But how did we get here? Well, the natural gas market is in extreme oversupply at the moment. U.S. natural gas production grew by a few percentage points year over year from 22 to 23, and now is at 125 billion cubic feet per day, which is an all-time high for U.S. natural gas production. And you can see how it is distributed throughout the United States. If that is interesting to you, you can go for more information at the U.S. Energy Information Administration. But yeah, this is one of those tough scenarios, and if you've traded crude oil, similar type scenario, whereby the prices are low, but obviously the producers here are still able to make money off of this natural gas production. Maybe there's some kind of technology advancement, or they've found a new point of supply of natural gas that's relatively easy to access. Because even at the prices that we're seeing, $1.70, $1.80, they're able to profit from it. Otherwise, they would stop production, or at least freeze production, or decrease production. But as you can see, the production has continued to grow to all-time highs in 2023. You can go look for more production data at the U.S. Energy Information Administration. But I want to get back into some price action stuff and draw some correlations for you between some of these commodity markets and U.S. dollar, because historically and theoretically, crude oil is priced in U.S. dollars. Natural gas is priced in U.S. dollars. And so you might imagine that these markets move in opposition most of the time. And historically, you have here, via the price data, more red than green, which is to say more negative correlation than positive correlation. But a couple of things. One, it might not be as negative as you thought. Crude oil at certain points has gotten to -2, -3, -4 correlation, which is decent, but it's not -7 or -8 or -9, right? And it was positive. Both these energy markets had a positive correlation to U.S. dollar in that 2019-2020 range, right there around the pandemic, where we were seeing a lot of weird price action, obviously, in energies and everything around that pandemic. So not as strong negative, especially for natural gas, has only gotten to really 0.1, 0.2 negative correlation, and was positive for that brief period there around 2020. So not that strong, and sometimes flashing green can have a positive correlation. And so these lows in natural gas, I mean, it's funny because you don't have the correlation there, but you do have a U.S. dollar market that is trading near its highs here against Swiss franc. But obviously, if you've looked at dollar versus yen, also at very historic highs. And in terms of euro and pound and some of these other markets, closer to U.S. dollar highs for the last 5 to 10 years than to its lows. And so U.S. dollar seeing some strength in the same time that natural gas is seeing weakness. The data is saying that it's not a direct correlation. It's not, and you can have this where markets are moving generally with a certain relationship, but the data is not showing it. Because you have, yes, U.S. dollar near its highs and natural gas near its lows. But the data is telling you that on a given day, if natural gas is moving lower, it doesn't directly mean that on that day, U.S. dollar is moving higher. But over a long span of time, they are moving in those directions, but one isn't really correlated or necessitating price action in the other market. But it is funny, even though the data isn't saying so, the prices themselves are saying so. Strong U.S. dollar, weak natural gas. And I might chalk this up to natural gas is in a very vulnerable, weak state right now in terms of its price because of this huge supply and maybe less demand than thought. This was a pretty mild winter in the Northern Hemisphere. And so you got those things working against natural gas, and then it might be a kicker effect almost of like, and the U.S. dollar is strong, and that's even creating a weaker natural gas market because it was already weak, and then the strong U.S. dollar that it's priced in is causing even more weakness. But the correlation, at least, not necessarily saying so. But let's wrap up with a little bit of semblance of where this market can go from here, because we started by talking about how we're at those historic lows right now, trading between 170 and 180. Over the last 20 years, the low for futures has been around 150, give or take a couple of pennies. And so more downside, and theoretically, keep in mind that zero is the downside in most markets, and you have to keep in mind that in crude oil futures, as recently as a few years ago, the futures product did go negative for a couple of weird reasons that very rarely come up, having to do with, it was a pandemic, some historic downside reasons for crude oil to be moving lower, and that negative pricing occurred right as the active month futures contract was nearing expiration. And so some weird tidbits causing that negative pricing. But futures can potentially even go negative. But we are at these historic lows for natural gas, so we'll see how much lower it can go. The only other thing that I would reference is that this is summertime for this natural gas market. And in these summer months, you tend to see lower volatility. And if you want just some highlights of that, look at the price action between the year markers. Between 2019 and 2020, not a lot of action. Between 2020 and 2021, not a lot of action. Whereas you're seeing big action if you're focusing around, say, 2019 itself. Those are winter months, right? That's November, December, January, big spikes in the price. So this is just to say, of course, anything can happen to the downside or the upside. You've seen as high as, like I said to start, $6, $7, $8, even $9 in this market. But in the summer, you tend not to see so much volatility for this natural gas market. Low prices could stick around for a few months, but we'll see where natural gas goes from here, and we'll see if there's any effect on that U.S. dollar market or on beyond to interest rates and S&Ps and everything else, though the correlation's not really saying so.